SoFi stock just gave us a wild ride, and behind the scenes, some serious moves are happening. From surprising volume surges to insider actions and massive options activity, what's really going on? Let's dig deep into the numbers, the behavior of institutional investors, and what all this might mean going forward. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's begin by analyzing SoFi's latest performance and the reasons behind its recent dip. The stock declined by approximately 1.04%. Not due to anything fundamentally wrong with the company, but mostly because it mirrored the broader market's direction. Throughout the trading session, SoFi fluctuated between a low of around $15 and a high of $15.64. One thing that stood out immediately was the immense trading volume. Over 86 million shares changed hands, far exceeding its average daily volume of 63 million. This suggests strong interest despite the slight price decline. Delving into the data from both regular trading and alternative venues, including private exchanges, the numbers were eye-catching. On the secondary market, massive trades occurred in the range of 1.5 to 1.7 million shares per chunk. Similar activity showed up in dark pool transactions. Roughly 5.59 million shares traded in ways that aren't visible to the average retail investor. This points toward aggressive institutional activity, and much of it appears to be in direct battle with automated algorithmic trading systems that have been suppressing price action not just for SoFi, but across several sectors due to recent macro uncertainties. One possible reason for that uncertain sentiment comes from the broader geopolitical climate. There was a slight relief rally in the pre-market hours due to a major state's decision to delay military action. That kind of news tends to ease market anxiety temporarily. However, that optimism was short-lived, as negative economic data soon surfaced. In particular, manufacturing numbers came in well below expectations. Actual figures showed a -4 compared to a forecasted growth of 1. This reinforced investor fears that the economy might be cooling off too much, yet central authorities are still reluctant to provide monetary support. Despite numerous countries around the world starting to ease rates to support their economies, the dominant financial authority in the U.S. hasn't budged. Even neutral analysts and commentators are now urging policymakers to act quickly, especially as higher rates continue to squeeze the housing sector. There's growing concern that waiting too long could cause more long-term economic damage. Amid this backdrop, SoFi released some notable news that could shape its future trajectory. They announced a new partnership with Benzinga to power advanced investment research tools. This initiative is designed to enhance the experience for SoFi Invest users and potentially boost member growth. This news initially fueled a strong pre-market buying spree, but as often happens, once the regular trading session opened, momentum reversed and the stock lost steam. When SoFi's price started heading toward the $15 mark, it became a psychological battleground. A break below that would have been viewed as a significant bearish signal, but buyers stepped in and prices stabilized. That move coincided with optimistic diplomatic signals from one of the Middle Eastern regions, further supporting the bullish reversal. In addition to all of this, there was another major development involving insider activity. A regulatory filing known as a Form 144 revealed that a company officer named Jeremy sold 66,000 shares amounting to about $1.07 million. This was not a sale for tax purposes. It was a direct voluntary sale. When we examine insider buying and selling trends, most past purchases happened when the stock was priced between $5 and $8. However, since mid-2024, insider buying has been non-existent. While not necessarily a red flag, it does suggest that executives might not see short-term upside, or they're simply reallocating their holdings. Now let's shift to one of the most important parts of the day: options activity. Today's volume included around 101,000 in-the-money call options. This is significant because such a high number of exercised options typically contributes to price movement in the following trading session. In fact, we saw market makers actively managing their positions after hours, possibly in anticipation of covering or hedging their exposure before the next market open. Looking closer, today's options market was heavily skewed toward bullish activity. There was $26 million in call premiums versus only $764 million in puts. That's a strong imbalance, suggesting that traders are betting on upward price movement. Interestingly, during the last 10 minutes of the session, specifically between 2:50 and 2:55 p.m., there were $2 million in large option orders. Among these, one trade involved $599,000 worth of 16 50-cent strike calls with a July 11th expiration, and another for $290,000 targeting the $16 level for the upcoming Friday. These types of trades don't happen randomly. They suggest that institutional money expects a further climb. Open interest data supports this outlook as well. At the $15 strike, there are 51,000 contracts. At 14.50, another 16,000, and the trend continues with thousands of contracts stacked down the line. In total, over 100,000 contracts remain in the money, which is massive. With that much on the table, there's a strong chance we'll see follow-through momentum into next week as positions get settled. SoFi ended the day closing at 15.20 cents, finding support at the 14.96 cents level. The next key resistance lies near $15.85, a zone it didn't manage to test during the latest session. On a technical basis, SoFi remains in a decent position. It's trading above several important moving averages, including the 100, 50, and 200-day lines. This provides a supportive backdrop for any bullish movement in the near term. Despite closing slightly in the red, the day was still productive for SoFi. It resisted bearish pressure, attracted massive volume, and showed significant accumulation through options. If it can remain above 15, there's a real possibility we'll see it make a push towards $16 or even $17 in the coming sessions. As for short interest, there wasn't a dramatic change. Early in the day, short sellers increased their positions by about 800,000 shares, but by the close, that number had settled at just 88,000. Currently, 12.99% of the available float is sold short, which equates to over 141 million shares. Notably, the minimum cost to borrow shares today was negative, indicating odd lending behavior, another potential sign of behind-the-scenes manipulation. Yet it seems shorts may be losing steam and even admitting defeat, especially since they couldn't push SoFi below the critical $15 level. In summary, today brought a lot of drama, but also a lot of clues. From institutional accumulation to bullish options action and strong support levels holding, there's a clear signal that momentum could be building. SoFi's recent collaboration announcements, insider sales, and overall technical strength all point to a stock that's holding up well, even in a tough macroeconomic environment. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching,